Well, good afternoon, everyone. Scott Henderson, shooter. Hey, of course, at the end of our presentation, please do review our disclosure. All right, let's start off with the dollar here. Now, note that we headed back north, not quite to 98.50 here, but we should be having a little more risk off than we're having here, even though I still view the dollar as neutral. And something is going on just because of the divergence in the spread in treasuries. And I can't really tell you exactly what that is. That could just be a large player like China or Japan rebalancing. So there's a little noise between the dollar and treasuries, and I really have a difficult time getting a great bead on whether this rally is going to continue here or it's going to just fade from here. And that makes it a little challenging, of course, to add new positions here, especially when the existing positions, such a small percentage of them are actually holding. It makes it even more challenging. And then if you look at the breadth and the volatility that we're seeing, so when we get a pump, it turns right around and dumps, and of course makes that even more challenging. Now, however, TLT, I think we do get down to my weekly trend support line down around 83.77. I will try longs down there. That's sort of my take on that. It has not changed. Let's jump over to the NAS or the S&P 500 here. All right, so we are now on this accelerated path. Now, the way I'm viewing this, as long as we don't break below this 720.65, we are long. And I would just love some kind of resolution to the Iran war here, but I don't see one, which every time I look at that, and then I look at moneyness and options, which I started to post a few of those for you folks to sort of see what I'm seeing. And basically what that means is that even the people that are chasing positions are not making a lot of money on those positions. There's so many positions underwater, it's not crazy. I mean, it's crazy. And when you have like a 50-50 split where you have 50% winners and 50% losers, that's a whole different ballgame. But when you look at the moneyness of your top 25 positions, whether they be calls or puts or whatever, and 95% of them are underwater, it makes it extremely challenging to add positions. But at this point, this is our path. It has not changed. Breaks below this, all it's done is put in wave one. So we know that we're going to get an internal structure here. We already know. It's going to map out. It's going to do something like this probably. We can consider that one, but it's too shallow for me. But I'm going to draw it just to give you a visual of where I think we potentially come in with our one. So I would think maybe we do something like this, get a back test, and then we continue further if that is an ABC structure, not an impulse. Impulse would make it that we extend much further on our three here. So, from a visual standpoint, looking at where fibs extend, we have some pretty solid boxes here measuring from this trough, this peak, and this trough, which is mound one, right? So our accelerated path is wave three should end somewhere around the 1618, but this is extended. So how much is that extended as a percentage from what the norm would be? The norm would be here. So roughly we are about 50% extended, which means we'll come up here. We probably tag somewhere around 1,095 in the S&P 500. If we look at the extensions and gauge it from there. So we have a lot of upside here. And, I'm extremely light. Actually, I'm disappointed with how light I am. But at the same time, I don't think those decisions have been wrong, because if there has been any, or there was any additional follow through from Iran, then, whatever gains were there would be taken away. So I would rather protect the capital. Obviously the number one goal is always protect capital, period. You can always enter another trade as long as you have the capital to do it. So when that preservation mode starts kicking in with me and I continually find reasons to stick to that thesis, it gets very challenging. And I was in that same spot here. We didn't get my back test back to the shelf when we broke out here. So I wasn't aggressively long here. I didn't get aggressively long until we broke out here, right here at this shelf. And the reason is because I had no clean confirmation of a pullback like we have here. However, the Iran war just silenced me, because I don't know how that inflation is going to wash into the economy. I have no precedent to look back on. I haven't been able to find anything that gives us to it. We've never had a scenario where we've had a prolonged period where the Straits of Hormuz have been just completely shut for 3 months. I mean, we have no history there. And I don't know that we weather it without some kind of intervention. And right now we have a new Fed. who is anti-QE. So the likelihood that he comes in and really starts the printing presses is probably null until certain things happen, either bonds break or equities break, and realize they're going to give up equities to save bonds at some point. But I don't see that directly on the horizon. I see the noise, just like the survival score is clearly indicating that there's substantial stress that's going into the spreads in bonds. So that means everybody's scrambling to try and stay positive on their open positions, because you can see them moving that much money. And we're talking billions to try and accomplish that. And it's not just investors, it's central banks. So we still need a catalyst for this to break down. Outside of that, I don't see the MO changing. I just think we continue to grind higher. Now that we've seen some positive earnings, and I was, yesterday we had gotten, or maybe it was the day before, yesterday we got the news that Google is in chat with Elon to put servers in space. And immediately after that, or put AI servers in space and solar and all that stuff up there. Immediately after that, a lot of the AI structural trades, infrastructure trades took a hit. Photonics, semis, etc. However, it was short-lived. We got this dip off of that news. That was the only news I could find that ultimately caused that flush, or we could see that flush, because basically any news from Iran has basically become silent. Okay, it's like everybody's saying, okay, Iran's over with. Mr. Market doesn't care. And the only thing that transpired during that period of time was the Google news. And then we turned right around and we kind of recovered. So the way that I look at the NASDAQ, I've got a number at 674.15. This is very aggressive. So we could get a very aggressive pullback. And I'm just going to throw a fib up here to give you a visual of what I think we should map. And I'm just going to measure this entire leg here. So my assumption is we get to about 78.6. We should get some kind of a pullback. And let me get my right tool here. I got the wrong one. All right. So we should get a pullback. This is my golden box thesis, by the way, that, you started to see this on my chart. I'm trying to map it in a way where it's functionally easy to use and I can keep it on the chart. But my bias here for a retrace based on my golden box thesis would be back to that 6.2 fib at roughly 626. So that's where my bias goes on a pullback. That's the most likely, which is pretty aggressive. And that's assuming this leg is just going to extend to the 78.6. However, it comes down, but notice how it does. Even if we ended here, we're still in that similar box. However, if we extend, it doesn't really extend that much either in either direction. So, usually that central box is a pretty solid target to look for. So when we get a pullback, that's what I really want to get aggressively long here, is a nice pullback in the NASDAQ, some kind of settlement on the Iran war, and then I'm on board and I'll be fully vested at that point. And I realize that as long as our support structure doesn't fail, this basically is our support structure, that should be a pretty sound thesis, that we play out for the rest of this year. So right now, even though I'm saying, hey, this is where I would reduce my long, however, as long as we don't take this out, this structure, as I see it, has not failed. All right, let's look at semi. Now, we are really extended here, and I'm just measuring this. And here again, there's that deep golden box look that I have there. I want to visually get an idea of where our leaders are, what they're doing, what they're not doing, where they're going to pull back to. So again, semis, and I don't know that, Google and Elon really present a quagmire, because the perception is if we put AI in space, we have no build out on shore. That, or at least that's the storyline that I'm getting from everybody, that I'm hearing. So if we get further, like for example, Google actually comes out and announces with Elon, they're putting 150 billion or $1 trillion into space AI over the next 5 years. That might give us our pullback in infrastructure, because the reality is, whether we put infrastructure in space or not, we're still going to need to connect that fiber down to where people are. And to be honest with you, the satellites don't offer the bandwidth necessary to run most of the AI servers. So we're still going to have some hardware down on the ground, but it'll be mitigated to some degree versus if we don't have those assets in space. So that's my take on that. Let's take a look at Bitcoin. All right, so, we're kind of wanning here. I would not be surprised if it rolls over here, because I can look at this as the flat. And so this would be, a dead cat bounce, and even though I do believe it is done and we're starting to see some flow going in there. However, based on the revisions to the Crypto Act, as far as allowing people to take dividends and income on the front door, we should have seen a hell of a bigger bounce than we did. So, there is some weight in the market where crypto might not hold up, which is one reason you see me at 1%. Even though I like the rules, I like the law, I wrote it up, put it in an article. It solves a couple of the problems for me. But I still am staying extremely small on that, but I wanted to start scaling in, and I went to 1%. Now I'm going to sort of wait and see how it plays out, see how it holds up. So ultimately, as long as this shelf holds, and I'm going to come down and say the shelf right here, even though I have a technical stop down here, is sort of my thought as far as I want that to hold, this ledge right here, to hold on the way back up. So we can get a pullback all the way back down to 70. That holds, we get some rejection there as far as from the sellers, where we get a nice wick like we get here. So we put it in a higher low with a solid wick. Then I'm going to start raising my position size. That's sort of my thought. Hopefully that was helpful. Let me get to my right. Okay, let's look at, so we added coin. We a little bit underwater on that. Again, it's only 1%. We off of this wick. That was the bounce off of the news from Congress. Really structurally done nothing wrong. I'm looking at this as, sort of a one will play out like this. So this is our one. We still should get something like this, I think. One, and then we get a corrected leg. And then we should start building and get out of it once we get above these ledges. That's my thought. Hood, very similar look, not quite as aggressive off of the low there, but still, my thought is that we do the same thing, consolidate. We need some flow into crypto. We do. We don't have it right now, and we have a lot of chop. So I see something like this. We get a reject, get an ABC here, and then once we pull back to this 91, that's a spot where we get really interested in getting a full position size. But the bulls are not back in control here until we get back above this spot right here, which is way the heck up. So we got a lot of rough looking charts in crypto, in general. So that's another reason I'm staying conservative. Now, SEI, and this is solely the fact that X or XAI will buy them. All of their major partners, 65% of their business is X. They are providing power to XAI. Clean solutions, clean relationship. It's been expanding for a while. It gives a mix to Elon in the power sector that he currently doesn't have regarding solar and his build out there. So there's a good synergy here. However, I'll be candid. It is very much a lotto, because if for some reason that deal falls through with Elon, it's dead. Okay. So I entered with some cash secured puts simply because it was a safer place to go. And hey, I was willing to pay 65 for it if that was the case. But ultimately, I'm expecting this to pop, a decent pop, on the news that Elon is buying. Okay, so typically it's a 10 to 15% move with something like that when we look at the history there. Just in the market scenario, I like the total build out, macro, micro, and the fundamental side of that and what they're doing. All right, so looking at Micron, same scenario. We got look at how far we wicked on that news from Google. We wicked all the way back to we wicked $100 to the downside. That's pretty volatile. So the structure that I see here, the fact that we've taken this back out, I don't know that we get a second general here. We could, but chances are we build out an inside bar here. So this becomes a one, unless there's some conviction from the market. Because I know that $100 pullback, you got a lot of traders looking at that and they're like, I'm not touching that yet. I want to see what it does. So we probably get a push, something like this, I would think. And then we still head up to the 2618 around 1300, but realize we're talking an $800 stock. So if that scenario builds out, it's going to continue to head to the upside, which is why we're holding. All right, Link getting just a little rejection right here. I'd like it to stick above $10. There is really no confluence for the bulls again until we get back above $15. Just sort of letting it play out. Again, this is my way of putting a piece on crypto in its sort of stagnant state and sort of waiting to see what happens and have specific markers on how I want to add. Now, I do want to bring in a piece back on Oracle, but I haven't seen the breadth expanding to encourage me to jump back on board. And that really is what's holding me back. That's where I'm running into that roadblock where I like something, I like it out of names. I have 16 setups and 50% back, and I've not been posting them simply because we don't have the breadth, and I don't want you guys to get buried in positions that stall out. So I'm not posting. That's ultimately what's there. The few pieces that I've taken so far, I'm basically flat for, the month at this point, really even last month, simply because nothing's following through still. So, but I do want a piece back on Oracle. I'm just waiting for that breadth to expand to give me a reason to do. All right. Sentinel 1 is working. We're right at resistance. So we sort of see what we do here. As long as we don't take out this wick, I'm going to add a new, we do not want to break below this candle here at 1490. We do not. That would basically indicate that this is only chop. We have this little strip. Now that we've built up, I'm going to pull this off. We do not want to get back below that body of that candle, because then that indicates that, this is just a dead cat bounce, and then we're going to come back and test this long-term trend support. So that's my thought. Google, still working. Don't have a big enough position size on it. Still don't. Need a back test. Right here. Gets back here. I get real interested. So I'm looking at this. I really want like a 2x, maybe a 3x size position on this. And it's probably going to go without me, because I am really being a stickler for rules here, just because the market hasn't given me reasons otherwise. But my golden box, I will add, and I will get to that, at least a 2x position size. We get any pullback down in this area, around that 340 level, if we get a pullback to that level. That's my thought. All right, let's go through some names. All right, let's look at BMNR. Tough tape to look at, especially with crypto sort of here. You don't want to cross below. I mean, it's not a bad place to give it a shot, but there's no FOMO here. There's none. You can see your buyers increased, right? Sellers equally started selling. So you got any pop back to the upside. Yeah, it's just, there's no reason here to jump until it gets back above this 24.35 area. We don't confirm back to the bull side, back to 42.09. So this comes back as, why do I want to own it? And right now, I don't see any reason why I want to own it with the way crypto is. That's my 2 cents. Sorry to say it, but that's it. A-Lab, we are putting in a 3 here. How broad that becomes is only known by Mr. Market, him or herself, whoever it might be. I still like a pullback to 140 before I get really excited. I don't think it gives it to us here. So the confluence to me is we're going to be somewhere between 382 and 444. So unless this 189.69 breaks, it's a hold. Period. It's going to break out once it gets above this high, right? It's going to launch. So we're going to get another leg, this final leg like we have here. Very similar leg once it's going to launch. As a matter of fact, let me just copy that so you guys can see what I'm just going to do it as an ABC, just since it looks more like an ABC in this piece here. So it's going to do something like this. So it'll get the initial launch, gets above here to do this. And it just happens to measure right to the 618. And I swear to God, I didn't do that before. All right. BE, Bloom Energy. Man, this thing just has got some huge upside. This consolidation is really solid. As long as it doesn't break below that 261.03, it's a hold too. That's just it. Not done nothing wrong. UNG is interesting here. However, what I've not seen, and this is the quagmire, is that all the cargo ships for UNG are booked. We have no more cargo ships to fill. So the demand thesis from the Iran war is kind of mute, because we don't have the capacity in the tankers, and it takes like 2 years or whatever it is to build them, the LNG tankers. So we don't have that capacity capabilities for this really to expand. So what's the most likely case? Well, we don't have an increase in production as far as the exports. Now, will the price go up? Yeah, it probably will wash into P&L. So maybe a stock like LNG might be a better bet, because the premium they're getting for the gas sitting in storage that cost them $2 may go up to 17 or 20 bucks this winter over in Europe. So they'll get a higher premium, and they're going to start selling the cargoes to the highest bidder. But yes, UNG right here is a good spot to give it a shot long, but I think we stay in this band. It does not confirm where the bulls get back in control for me at all until it gets back above that 17 bucks, which is way the heck up there. But that's sort of my thought. First target equality would be the 618 there. Just going to bring in my chart with labels I have here. Gives me the visual. So equality is that $17. Trend confirmation technically doesn't occur at 29.04. So way that. AST Space Mobile, good spot to give it a shot. As long as it doesn't break below the shelf. This is noisy, very noisy right here, right? I mean, truthfully, this is where we don't want it to cross below, right? However, I moved it up and I said, okay, I'm not going to give it that much room here because I don't, or if I was in this trade, I would not want to ride the heat back down to $60. So that's my thought. So I would probably wait and see how this candle plays out. So you're going to wait another week, maybe. I'm going to come down to the daily and just look at the candle here for a second. So this rejection, so we should get an ABC. So if I was going to enter this, which I'm not, only because I'm thinking it's more of an ABC structure like this, and we get a better price back down here at this 65. That's my thought. So that's the challenging part, is that it looks good on a weekly, but when you drill down and you look at the shorter time frame, I would say there's maybe a 55. I'm not going to give it a 60% or a 70% chance that we build out to an impulse leg here because of that inside bar. And exactly how even it is between the buyers and sellers, that typically implies a directional change, which in this case, since this was a push rally, the directional change would be bearish, and then the most likely target is down here. So my bias would come back to this box right down here as far as where I would want to add to it and own it at that point. All right, clean spark, just continuing to work. 2 is in, we're putting in 3, should come in around 17 bucks, I think. Really hasn't confirmed an uptrend for me for the bulls until we get back above that 1540. I'm going to leave this line down here because there's a lot of noise here. We could have a lot of noise. As long as it doesn't break below this, because it breaks below this, it means it's going to go back test this. So structurally, that would break the impulse back to the upside. However, if we look at this structure, peaking drive 1, peaking drive 2, it's a good chance we do get a peaking drive 3. And if that's the case, it'd be really tight. But we also could get a deep 4, and we keep going to build out our 5 and still take out that 618. So structurally, it looks good, and clean spark, maybe 2027. The build out for AI is something, the timeline is extremely challenging with the power and the CapEx problem that we're experiencing right now. So as individual providers, AKA Elon as an example, or XAI, or Google, solve their infrastructure problems with AI, and basically, it's just like DRAM. Right now, AI is totally determined on memory. And that's my single problem running with AI, is that I still don't have a persistent memory, because there's really not a way to do it. Because when you turn on your instant, it has to research what's there. So it's constantly recharging you to get back up to speed. And I've not found a shortcut to do that where it maintains a consistent memory like you or I have. And we don't have to go back and read about our entire life to get that kind of a recall. What ultimately happens is we pay for that again. So that is where I think the tech side or the app side, especially from safety and security, comes in as we get more of those build outs happening. And I'm thinking late 26, mid 27 is when we start seeing more of those happening. So I think Clean Spark will start rocking a little bit more in that time. Okay, let's look at Tandem Diabetics. Just a total bearish look to me. It's total bearish. It's confirming. No. So, and I'm looking at an ABC. So this is a leading diagonal, right? Followed by an extended A and a shallow C on an ABC, which typically means we're going to get an impulse leg. So that would mean that this is probably most likely an impulse. So this is 1, 2, 3, 4, 5. Then we get a corrective leg. Then we get 3. So this is our 1 in the larger wave. Let me just draw that out again so I give you a visual. This is the most likely outcome. So we're going to get something like this. Now, could it become an ending diagonal and tighten up? Yeah, of course. One reason my bias box is there at 775. There, I like it maybe to give it a shot there. But structurally, it doesn't measure to the downside. Don't even get interested in the longs here until it clears this 2196. Just because there's no reason to jump long on this way of the map. Conviction that we're going to continue to head a little lower and at least take out this low? I'm going to say 80%. All right, let's look at mRNA. Nice base. Should be breaking out here at some point. We got a little resistance right overhead, so we have this buy-side imbalance that we're sort of looking at right here that we have to take out. So until we clear that, it's probably a lot of noise between here and now. However, we are putting in a clean mound. Look at the mound structure in RSI, right? So this is good consolidation zone. This is probably our higher low. So unless it takes out that 43.68, you want a piece of mRNA, probably not a bad play. And realize mRNA is also going to be a benefactor from AI, but I can't tell you specifically how they would benefit versus any other farm kind of thing, because that's not something I've really dug deep into. But the bias is that pharma gets a tailwind from AI, but I can't tell you it. So that would be my structure I'd look at. Breaks out, I don't know that I'd even go a full position. I want to see if it holds and takes this out right here. So this, let me put this, I'm going to put another line. So we want to clean this or clear that 70.05. Then, I'm a little more bullish than I am sitting right here. All right, Microsoft doesn't look done to the downside now that we rejected. I think it was last week I threw up the invalidation at 413. The most likely look here at this point, and realize that when you have this kind of a tight box, I'm just going to draw it this way so you get a visual. When you have an extended C line, quite often 5 mimics the distance of wave 1. So it's kind of like my elongated and extended thesis with ABC. This is a specific impulse wave pattern that occurs. So when you see this high and tight 1, typically you get a high and tight 2. And in this case, it almost maps perfect if you actually move it right to the tape, at least with that mindset. So in this scenario, it will either be shallow, right, an exact duplicate of what's here, or it overshoots prior low just slightly over here. So this is the most likely outcome. So my thought is that this is where my buy. And the only thing that is doable here is cash secured puts probably are decent, well out of the money, like 350s. But I would wait to sell those until we test these lows. That's my thought. RTX, good spot to try it long. As long as it doesn't break, let me just be clear. You know where your stop is, right? At 168.20. I mean, it's clean. I mean, it's about as clear as day, right? So bulls don't take back control until 205. However, this is likely a ending diagonal, which means 5 is going to be shallow. So 5 can come in anywhere from here, or it still can push to 78.6. Most of the time it's shallow. So the most likely outcome is always the 618, but that's sort of just fine. But not a bad spot, where your stop should be, at that 168 to give it a shot. Now there was some kind of an article that quantum computing has something coming. Well, it wasn't an article. It was actually a story that I had read from some of the brains inside quantum. And, apparently they have quite a significant achievement coming out of Google, supposedly. And, I don't know whether that's truthful or not, or just hyperbole like so many things are today. However, the tape is telling me buyers ran. Okay, when you get a wick like that this low, notice our other wick. Likes to wick and reject wick. We didn't get as big of a reject here, but it does like to reject. Now, notice that we don't have seller exhaustion in those candles. So the challenging part here is that a XABC pattern, which happens to be one of my favorite patterns, right? It could be done here. Could be done. It looks a little distorted. I think it's more likely at 306. And the reality is it could shoot all the way down to the 618, which is one of the reasons I like the XABC patterns, is because it's one of the few patterns that typically reverts 100% from the move. So, the most likely outcome, there's like a 65, 70% chance that it reverts down here to a penny. However, these candles and this volume imply differently, and we are confirming. So that means my opinion is we have at least a third peaking drive. Peaking drive 1, peaking drive 2. So peaking drive 3 comes in. Let me pull the line up there for you. I always want to look as to why I'm right and why I'm wrong. Or why would I be right? Why would I be? So equality, and forgive me, I saved it as another way, and my dyslexia is going to drive me crazy until I type that in there. So equality is going to be right here around this box. So my bias is that 1925, right there. That would be my bias back. That's my 2 cents. Lunar, running. No reason to trim this. Your stop should be deep, $28. Doesn't take that out. Honestly, this is probably a shallow look with how aggressive this has been. I'm going to come out to the monthly on this one. Is that like a wick or what? So we are in price discovery. And to be honest with you, I don't know that much about Lunar Intuitive Machines to know really what they're into, besides knowing the name and liking the name. So I'm going to come out and I'm going to do on the monthly here. I'm going to give you a bigger view of what I see this potentially doing, because it could potentially do it justice. So 3 is the longest wave, and then we probably continue up to the 2618 about 55. Challenging part is it's going to be a pullback, probably about $26, considering how deep. So the most likely case is we reject at $39. So, in that scenario, if I was holding this, I would be trimming and then thinking about a way to add some cash secured puts on the way back up to ride out that last leg there, unless I really wanted to take the lotto and put some calls on, but I don't see any reason to do that in this market because I still think I think we have a decent drawdown coming, no matter how we slice the break. Either it's a slow moving grind lower because inflation starts hitting the market. However, earnings this season does not reflect that. I mean, we have no supportive evidence for that. The only thing that's really negative at this point is the spread on bond, right? And right now the dip buyers are here. So, that MO has been that way since 2020? I don't see that changing at the moment. So, all right, looking at Fiserv, it's done. I'm going to come out for the monthly on this one. I mean, it broke this prior shelf. So the first thing, what's the timeline on the moon though? That's the first thing I'd be looking at is how far out is that? And it really, position trading right now is challenging because what just happened in Iran, right, is going to give us a supply dynamic that we haven't had. We've always been able to get oranges when we want to get freaking orange. Or if we wanted, copper, we could get copper. What's going to happen to the system when there are no oranges to get and there is no copper to get? And I'm just using those as an example. The scarcity is a significant factor with anything that has a future business model of growth, including CapEx for AI, including space as a service. Now, the one advantage of Elon is that he can fund the entire project that he wants to do on the moon. He doesn't need any help. And unless Tesla stock dies and every one of his other companies dies, he's still going to have $1 billion or $2 billion to shift over there at some point if he chooses to do so. So the thing is, those outlier companies, though, I think it's a better bet. And I'm just Google, to me, cash secured puts. It's like a no-brainer here because they are constantly, we're not just talking playing the game in AI. These guys are beating everybody's ass. In short term. Even though I still favor OpenAI because it was my first AI. I built my own AI language model in OpenAI. However, the logic and the thought pattern from Anthropic is just superior, period. It just is. And when you compare that, Gemini is chasing right at the footsteps. So it's now Gemini, Claude, and Grok. And they're running neck and neck. OpenAI is like a retail investor kind of thing. So anybody who's programming or running anything with AI agents is either Grok, Gemini, or Anthropic, period. And that's where it is. So Fiserv, just back to the stock. We're going to test this low, and we're going to find out whether it's going to give us a full reversion of the mean if that 45 holds. There's a good chance it doesn't with this look. This is too aggressive. This looks to me like somebody lost their business. That's what it looks like. Doesn't mean it won't recover after it finds a floor. And it is trying with RSI, but the MACD is wide open. And if you look at this sell volume, now we had fewer buyers trying to come in here, and look at it, just rolled back over. So looking at equality, so I'm seeing this right here as equality. So I'm going to say it's going to at least test that 46, 43, which is right here at this shelf. Then we sort of look and see what we want to do at that point. But I still would want it to take out this prior high here, right here, to get any interest in getting long. So it's got to get back above $70, which is a long way back up there. There's better setups. I don't think we're in a bottom fishing market right now. That's just my thought. I think that we need to follow the leaders that are getting the flow, or there's no game at all. And that's really hard for me to say, but that's what I think in this market, the circumstances that we're in. If we don't have the buyers coming in and supporting the stock, you don't have the flow or the volume to keep it elevated. It's just going to continue to bleed. So, all right, looking at PSIX. So clean head and shoulders. I pointed this out before. It looks like it's playing out now, except for we got one more aggressive weekly candle. So, that call up on that wick was pretty spot on. So I would think we test this floor here, and then we get a little dead cat bounce, and then we continue to put it in our floor. That would be the most likely outcome. RSI is kind of confirming, so it's telling us. If we come in and we draw a speed line for where we would go, it drops us right back down to that base as well. So now in the technical indicator, I have some confluence that's where it's going. All right, SATL, this, it's just beginning. Now, I left this as was because I wanted to sort of give you the map that I drew versus where we're going, and I'm going to keep that there just for that because I like to show how Elliott wave progresses and how accurately. I mean, I use the term standard deviation, so you can pretty much call it within a standard deviation. And so when we extend, so we clearly, the way I look at this is this peak and drive 1, peak and drive 2, peak and drive 3. So this is wave 1, right? However, in this scenario, I included this flat. But now I'm going to exclude that for a second. I'm going to draw a different. And it's only because, of all fairness, this pop, we have to account for this in some way. So that's why I did that, just so you understand that. When I'm looking at a tape, that's sort of how my mind. So in that case, we're going to extend above. If this is where our impulse starts right here, we're going to extend above that. Now the 3618 becomes. So this has a strong candidate to extend. So until this breaks below that shelf, the flag that was below that, immediately below price, and I'm just going to draw the wick. Now I'm going to draw the body. No, I'm going to draw the. So until it closes below 733, it's a hold. Period. I think it's got significant upside. Rocket Lab. Now, the map pretty much is spot on. Now, you're going to get a gamma flip that comes in at 139. In other words, what that means is broker-dealers are going to flip. So right now, they're long, and they're going to turn short. And there's going to be a lot of pressure there. We're going to pull back. So how I would trade that, 139, right? We want to sell, and then we want to sell some 95 cash secured puts on the pullback because it is going to reject. And the most likely box that it's going to come back to is that golden box. Let me get my right one up there again. Put the wrong fib up there. So, roughly 87.71 is a likely target for that to pull back as far as the look. Okay, let's jump over to ONDS. However, back to Rocket Labs. I would not hesitate to take profits into this. The reason is because there's so many names that keep giving it back, and it's always these really impulsive names, and realize the supply side dynamic that is partial. Right now, nobody's looking at Rocket Labs like, hey, we have scarcity in metals, now we can't build that spaceship, okay? Nobody's looking at that. However, that's a factor. Aluminum is a factor. Specialty metals are a factor. I mean, it's a huge problem for Tesla right now because they have specialty metals that they built specifically in the Tesla truck, that they're having a very difficult time sourcing, and I'm hearing those rumors. So, now jumping over to ONDS, equality to me is right here back at the 729. So the way I look at this, or the way I'm thinking about this, is cost average in at, the scenario. Reason is because it could be done, So if you buy it here at 894, and then it pulls back, plan on adding at 8, and if it pulls back again, add at 7, and your cost basis would be about $8, which is not a bad game plan right where we are. The only thing I don't like about this is we're still confirming an RSI. So we haven't taken that out. We don't have any divergence. I'd rather see divergence, and I'd rather the MACD cross for me to slide in there. But I do think that drones significantly continue to expand, especially if we enter in a prolonged war and we have an expansion of war outside of Iran, which is still one of my larger concerns, in being fully long here, because all we really need is some kind of engagement with China or Russia that's not currently there. And man, it is just gonna pop the bubble, and we're gonna have a huge decline. That's so hard sitting in front of that, because we've been here for 30 years where we really haven't had the risk of World War III on the table at all. Even though people have suggested it was there, we haven't had consistent engagements. We have the Ukraine war with Russia, which is a proxy war. We have the Iran war, which is a proxy war with China. I mean, now we have those culminating all in the same thought pattern. So this ONDS is a name that I think will benefit if we end up into an extended war. But I'm not ready to make that bet here yet, because right now it looks to me like this all gets resolved. It does. So that is challenging because I don't want to put the risk on the table going into a recession, etc. And that's just the way I'm thinking about this. All right. LBTR. Now it's actually a good spot to try it long. You know where your stop is on this one as well. 978 breaks below that. Realize if it does that, it's going to come down and test equality. So now when I measure out equality, what I'm basically saying is, yeah, it's a good spot to try it. But if it rejects, then you want to plan to add down here on the third drive. Because very often do we get beyond a third drive when we get a third drive. When we have an extended trend, where you're hugging a downtrend to the downside, that's a different story. But it's a completely different pattern. We recognize it and we can understand that. So let me jump over, really doesn't get bullish until we get above 1891, but a good spot to give it a shot long, that's for sure. SNY. Now this actually has some huge upside. Doesn't really confirm the upside to 142. 1618's up at 170, totally viable. So in this grouping, we had three generals. We have kind of an inside bar. I like this wick, because whatever sell we got here on this breakout, they came back and took it above this. So we are probably going to take out this 142 regardless. So until that 121.37 breaks, it's a long, okay? All right, well, I believe I covered all the names. Did I miss anything for anyone? Great. Without further ado, let's call it a day, folks. Great trading until next time.